Lifting the debt ceiling is not a social policy. Lifting the debt ceiling is increasing the massive imbalances of the US economy. It is true that there is a negotiation to reduce some of the discretionary spending, but discretionary spending is about 1/3 of the overall budget in the United States. Mandatory spending continues to rise, and therefore it is absolutely critical to reach an agreement to bring discretionary spending at least to the levels that were before the COVID-19 crisis. Discretionary spending has increased massively and consolidated despite the recovery of the economy, the end of the pandemic, and all of the improvements in employment and the growth of the US economy. Therefore, the debt ceiling negotiation may look ridiculous because it's going to be lifted anyway, but the negotiation is critical. And it's critical because discretionary spending needs to be reduced. Furthermore, the growth in discretionary spending needs to be curbed very significantly to limit the bloated level of government spending that adds to the already rising mandatory spending. And it is essential to keep the confidence in the US economy, because the US dollar as a world reserve currency, the treasury bills as the lowest risk asset in investor portfolios, and the value of US debt as a reserve for global central banks is a danger if the government continues to spend massively above its receipts and continues to increase the debt to unsustainable levels. The US economy has a very significant additional access to credit because of its global demand. But if it loses the confidence of global investors, then it would enter into a massive problem. Therefore, the negotiation that limits the increase in spending is absolutely critical to avoid the destruction of the confidence in the US dollar, in US Treasury bills, and in the US financial system in general. It is not an irrelevant factor. Raising the debt ceiling may seem ridiculous because it's going to be lifted anyway, but the way in which it is lifted is critical, i.e., paying attention to the global demand of US dollars and US treasuries. That's why it is important for the negotiation to bring down the level of discretionary spending and to bring government spending to GDP back to the levels that existed prior to the COVID-19 crisis, because it's risen and because it is much higher than what the economy would accept if it continues to grow at this pace. And higher government spending, higher deficit, and higher debt are extremely dangerous factors. They are not social policies, they are burdens to growth and to employment, and certainly the higher the level of debt and the higher the level of deficit compared to the global demand of those assets is certainly a big risk to the US dollar, to the US economy, and to all American citizens.